Hey, I'm Bill Fanter, founder of Options Action, and you're watching the weekly Watchlist. If you'd like to get access to this content before it goes live on YouTube, just hit the first link in the description to sign up for our free weekly emails. All right, let's jump right in. Hey, welcome back, everybody. So, this is going to be the watch list for Monday, August 11th. Let's go ahead and start as we always do with the economic news. Good thing is there's nothing to report on Monday, August 11th, so it should be fairly calm in the market unless we see some political news coming out overnight between Sunday and Monday market open. Tuesday, we are going to start to see some more inflation data, and that's kind of what the market is just hinging everything on. Right now, inflation has been contained. However, we are seeing more and more companies talk about it during their earnings release, and they are getting slammed to the downside. I'm going to review a couple of those with you this morning that were actually announcements from last week. So on Tuesday, before the market opens, we're going to have CPI, which is the Consumer Price Index. So is inflation holding steady? Is it starting to move up? We know tariffs are now, for the most part, in full effect. So businesses have to start paying the tariff rates dependent upon the administration's guidelines. And are they going to do one of two things? One, they're going to either eat it and take it in profits, right, which is going to reduce the overall profitability of the company. That's going to bring down the revenue. It's going to bring down the EPS. So that could be a trickle effect going into Q4 when they announce Q3 results. So I think it's going to be definitely a wild ride between now and the end of the year, providing that tariffs stay in play. Now, if they get pulled off the table, then that will be a completely different story. But we've been kicking this can down the road long enough, but right now they are in play. So we're going to want to watch CPI. We are going to have some Fed governors that are going to be speaking. Don't anticipate that they're going to really move the market too much. For the most part, there's only two that had felt that they should be lowering rates, whereas the rest of them said that rates should be staying the same. Wednesday, again, nothing really good going on. Some Fed speak, not too concerned that it's going to move the market. Thursday, again, what we're going to want to watch here is going to be jobless claims. So they have been on the rise. So again, remember, the Fed's mandate is twofold. One, maintain maximum employment. Two, control overall inflationary pressures. So we are going to have jobless claims at 8:30 in the morning before the market opens. Then we have the PPI and the core PPI, and then the year over year. So the producer price index is what is happening to the cost of raw goods and services and materials that go into manufacturing the products that we consume. So we're going to want to watch and see, is it costing manufacturers more money to make that pair of shoes, to make that cell phone, to make that water bottle, right? Whatever it is, because if they are reporting higher costs, again, they have one of two decisions: either eat it out of profitability or pass it on to consumers. Friday, we're going to finish up the week with some U.S. retail sales, so we'll see how the overall economy is doing. We will also have our import prices, and obviously imports have slowed dramatically from where they've been because, again, due to tariffs. So we'll see if that really comes into play. And then we're going to have some consumer sentiment. So this has actually been a market mover in the past, so I would definitely keep an eye on this. Now, the interesting thing about consumer sentiment is it was going down, 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 and then about a month and a half ago, we saw it rebound back to the upside. So that was definitely a market mover on the day that that came out. So always be aware of news that when it's going to drop, you probably do not want to be in an open position. Now, earnings is still moving forward. We have not too many really big names that are going to move the market this week. There's only a few that I would probably keep a close eye on. One of them has been the high flyer Kava, which is going to be after the market close on Tuesday. Wednesday, a big market mover is going to be Cisco. Now, this one we're going to look at the charts on because I want to show you something interesting with this one that we might be able to take a trade off of. And then Applied Materials, right? Materials have been a big talking point about what's going on in the administration. So other than that, We'll still have Nvidia coming up. I think that's another week out, which will be a huge market mover. And I'll be sure to point that out in future installments of the watch list. But that's kind of where we stand with news. So let's go ahead and take a look at some charts. I'm going to start out with the ETFs, SPY and QQQ. We are almost back to new all-time highs, right? I mean, we are pushing back where we were here before we had a little bit of a reprieve back here in July 31st, right? And then we got some, again, weakening data, jobs number scare, and we move down, and then they turn around and they buy the thing right back up. So we are back to approaching the same levels we were at before, going long above 638, 67 seems to be prudent, right? So looking at this on a lower time frame, higher time frame. Now, mind you, the market gets more jittery up here, and that's why you'll have these huge market sell-offs, right? Nobody wants to be left holding the bag at all-time market highs. So when you're trading up here, if you're going to trade the ETFs, you have to do it with Confluence. You have to watch SPY. You have to watch QQQ, okay? But you could kind of see where I'm grabbing my levels from, which were prior pivots. You can also go ahead and we can add one here where you're going to note what is happening at this candle wick high is also where this body is just about rejecting, okay? So these are going to be the levels I think that I would pay attention to. I don't know where in the heck that one came from. Probably from this candle wick that did not transition over. So we had a bounce here and then we had a reject here. I actually like this a little bit higher. I'm going to stay kind of right in here where I have a body hold, a wick reject. Okay, so right around 639. Now, these are very, very tight. Okay, so what you really want to get back above is 639.33 to go long. And then ideally, these would be your pivots, right? So watch your pivots at the top of the candle wicks. So we'll leave that there and we'll just kind of watch how this one plays out. Let's take a look at QQQ. So we have had a lot of relative strength here. This has actually been leading compared to SPY, but look at what's happening. Again, we had a new all-time high in the pre-market back here on July 31st before the market sold off. So we had that rotation to the downside. Wow, this one I don't want to really go long unless we get a pullback, right? I do not want to be chasing this up into 577. I would rather just sit here and see if we potentially get a reject. I'm going to throw an interim level on right here at 576, okay? And we'll watch and see what the futures does with this on a go-forward basis. But again, no need to trade up here if you don't want to. Just go trade some of the individual names. So let's talk about the elephant in the room. I mean, talk about a ripper. This is one of my biggest fumbles in years. Where I had $36 calls on Apple, got out of them at 38 on Friday, okay, because of this drawdown, and they literally went to $470. I mean, it was a 10x, 12x trade, but not going to cry over spilt milk. But what I am going to watch is this price level up here at 230. Now, I'm definitely not going to fight momentum. So any of you who tried to short Apple this week, probably got your butt handed to you, right? It started on Wednesday with the White House, Tim Cook talking, then it gapped up overnight. It kind of traded, consolidated, and then took another huge run on Friday to the upside. Now, this thing still has a lot of momentum and a lot of room going higher. So I don't want to be just thinking puts, right? Because let's go out and zoom out on a higher time frame. And let's look left. But look what's happened here when they get to 230. They push it up to 240, okay? They get back down here again to 230. They push it all the way up to 250. So this is a very strong area that once we've demonstrated that we can hold this, it can move up 10 points, right? But once they lose it, then that's where it was flushing, using it as resistance, and then it was just stair-stepping down and consolidating. But we are now back to kind of a moment of truth. So this 230 price level, if they get above it with some momentum and strength, I think this thing potentially could keep going up dramatically higher, right? So is this the sector rotation that has been underbid the entire time? Let's take a look at the other big dogs. Microsoft, great pop off of earnings, and then a precipitous sell down, right? They didn't hold this thing for very long. So let me zoom out. I'm going to go to a daily time frame where you can see what happened here. Here we had earnings, okay, back here on the end of July. I mean, really great acceleration to the upside. And then they turned around every day since and sold into it. So this is your overall response from your earnings, right? And then they literally drop it down, push up, come down. Okay, so we have this reject level of 539. I would expect that we should start to see some bidders back here at the 223 level, or people at 523 or 513, 518, right? Somewhere in this range, who wanted to go long here to catch this move, and they didn't get an opportunity to do so. So now, will they get that second chance that they missed first time around? I do like calls if we could get above 522.65 and hold, although note we have a lot of sellers here, so that could create some chop. But if for whatever reason you get above 539, we're definitely heading back up to 561. So I do like this from the long side. Don't necessarily like puts. We're going to kind of struggle in here though, right? You can see this. Sellers, 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 a lot of sellers. If we break below 518, then definitely down to 513. So kind of keep an eye on this one. Mark your price levels. And then something very simple to do is when we get down here, right, just add an alert on this horizontal ray. Okay, so once it gets here, if it crosses it, let's create an alert and it will notify us to come take a look. Let's take a look at Nvidia. Another huge market cap stock, right? Making new all-time highs. So it did hit its all-time highs here pretty much in the pre-market. I didn't mark these out. Reason being is volume is usually so low, price is more erratic, but I did take this all-time high here that was at the market open. They pushed it up on Thursday, failed it, pushed it up on Friday, failed it. So now we are trading back and forth here. So I'm not opposed if the market is weak to take a put at 183.30 or taking a bounce at 181.77. Okay, those are my levels for that. The other market mover, AMD, again, nice sell-off after earnings. Okay, so I had a trend line here. I shared with you guys on the video that if we break to the downside, you could look for puts. So we'll go ahead and remove that. That was definitely a fantastic put trade that played out over 2 days. Earnings, they sold it off on good earnings because they have to reimagine parts of the company for AI. But now we are coming back up to this 172. Now this one has had a lot of volatility intraday, right? Intraday, push it up, sell it off, buy it up. Intraday, sell it off, buy it up, sell it off, buy it up again. So this is a great one for options traders. So if you're going to hold, right, 172.33 with some strength in the market, go long. Now, puts. You can take puts, but you have to understand that they could be very short-lived down here around this 170 level, because as you get into the demand, right, you're going to get the bounce. You're going to have some bumper to push this higher where your trade, or you'll want to at least put your stops and profits. But we fail below 170, then we definitely have room to 167 and even further from there. So 163, 162, and that's where it pushed down after earnings, right? So after earnings, it pushed up, it came all the way down here to 158. So just note these overall price levels and then just trade them accordingly. Another ripper this week was Tesla. So Tesla back up, I believe, to that 230 level, if I'm not mistaken. Let's take a look. Yep, 330. Sorry, off by $100 there. Another great ripper. This one had some negative impact on Lyft, that they were approved for a longer term extension on their robo-taxis in Texas. So more automation is coming into play. No really good news to say event-wise, but watch this for the consolidation, right? But this is bullish consolidation when you're consolidating at a price level, right? This is not bearish. When it keeps pushing up, pushing up, pushing up, it's eating into these sellers. And if it can get above it, then it will be able to gap and go all the way up to the next level. So I would watch this for some bullishness. Potential reject here at 332.01, right? It had a hard time holding up here. You can see we have overlapping sellers, 30-minute, 1 hour, 45-minute, 1 day. So it's fairly heavy resistance up here. But again, weakness, take the put trade. Strength, you're going to have to probably be a little bit more patient on this one. Let's take a look at from an earnings. I did mention that Cisco is going to be announcing earnings. Now look at this one. This one's intriguing. From the perspective of that you're looking at these new highs, but you have to go back literally in time to see when was it at this price level, and it was actually in Y2K, the year 2000. So for 25 years, if you bought up here, you had to literally sit and wait for this thing to move higher. Now it did pick up some steam here in 19, right before we started to get pre-COVID, right? Pushed down, pushed back up into COVID, sold off. So we have some really good levels to at least be able to trade off of from my perspective in this stock. Do I think we're coming back down here to 37 bucks? I don't, but it's a level on the charts. And they have earnings coming up, okay? So this is, again, something that's been under-owned for probably 25 years. Could this be your catalyst like what we just saw in Apple, right? Where it's so under-owned because of such awful performance to the relative market that nobody wants it. But now all of a sudden, does this thing seem to pick up some steam? Now, I wouldn't short it. Why? Let's do this. Let's go back and look at this on a monthly basis. And when you see this, maybe I'll go out a little further, but they have not missed earnings for literally ever, right? Here's all their earnings. Look at this. Beat. I mean, they have beat earnings going all the way back to when it was reported back in 17. I mean, so for almost a decade, they kept beating earnings. So why would I think that they're going to miss earnings now? Now, is it possible? Surely is. But I think this thing is so undervalued that you're going to get buyers to step in. So I do like calls on this one. I might even take a gamble on this one and, take some $70, $75, $77 calls. I'd have to see what the options chains are for earnings, right? But this thing is now actually coming back to life. So could this be a catalyst to go higher? Now, what I would really love to see us do is pull back to the 69.53, which is a prior all-time, one of the all-time highs, and for us to move back to the upside. So keep an eye on that one. I did speak of Applied Materials. This is another one that, again, has been in the news. We are right at a great price level to go long. These things are going to be a little bit more expensive, right, because the stock's $185. But if we get above this 185 and hold 185.11, definitely like calls up to the $200 level, and I'd probably play the 190, 195, or $200 calls. Just see what they are. We do have earnings coming up, so again, be cognizant of that earnings date, but materials has been a hot commodity. No pun intended, right? So look at this prior pivot, reject, prior pivot, same price, reject. Where are we at? Same thing. If I were to draw this line left, which I can easily do, right? You can see where we were rejecting and now where we are essentially holding, okay? So always look left, right? Reject, reject, rejecting here. We're pretty much right on the money with this thing, and we have buyers below us. So I like calls on the market open. So I'm going to watch this one as well. Let's look at three more earnings that just got decimated. One is going to be Trade Desk, okay? This has been holding this bounce level. This one is probably a longer-term swing trade for those of you that maybe want to go out 30 days. So look at 30, 60, 90 days out and look at options premiums. And you don't have to go that far out of the money, right? Just maybe come up here to the $60 calls or the 55, 56, 58, just somewhere in this range. Like look in this area to say, do premiums look attractive for me to go higher? Now, this is not a gap fill, but I'm just showing you the range that I would be looking at options to say, could this make sense? Now, I would at least target the $56 call. Why 56? Because that's where we were able to get up on Friday and somewhat hold, right in this area here, before they sold off the market right into the close. And then where do they sell it off to? Back to the price level. So your first price target would be about 56 bucks. They probably shouldn't be too darn expensive, but this stock has dropped 30% 3 times in the past year. Now, they did beat on earnings, but it was their guidance that the market didn't like. So this one, again, I think is a really good potential trade to the upside. Let's take a look at another one that got decimated, beat on earnings, but again, tariff issues, right? So Crocs, I don't know who's wearing these all the time. I do have a pair, occasionally put them on, and but they beat on earnings, they beat on revenue. But look at how the market just destroyed this stock. It had closed at 105. It's now trading at 75. So a 33% drop to the downside. But we're holding this price level on Thursday, on Friday. Let's watch it Monday. Again, just go out 30, 60, 90 days, target some calls, right? Probably for the $80 level. I think this is good opportunity in a strong market. And then the final one that I want to look at is Block, which is XYZ. I don't know why they ever came up with that ticker. But again, same exact thing, right? They had earnings. They disappointed, okay? So they missed on revenue. They missed on earnings. This company was trashed after the last earnings, and then they rallied it all the way up because it was going to be included in the ETF, right? So look at how they've missed 1, 2, 3, 4 times. So the last time they missed, they did the exact same thing. They sold it from 55 all the way down into the 40s, okay? So let's zoom in here. You'll be able to see this. This was the prior earnings, right? It was up here at 59. They sold it all the way down to 44. Again, don't catch a falling knife. It didn't get down to 38, but once it recovered 55, and then they got news it was being included in the ETF, right? Then what happened? It moved higher, and then a big miss on the earnings, and they sold it right back down. Now, this is another great example, guys, and it wouldn't really be relative per se now, but this is where, again, I share all the time, when you have a gap fill, it acts like a super magnet to drag the stock down. And what is it doing? It literally came down and filled the gap. Okay, then you had earnings, so it moved back up through the gap. So when you got a stock coming down and it starts to get near the gap, it's going to act as a magnet. And then it marched up the next few days because we're on a daily chart. They get earnings right here, trash it. Where do they trash it back to? Back to, again, the bottom of the gap. This is where, right, your liquidity is sitting. So this we could even take and draw right here. And we'll just use this candle wick high, which is would have been the top of the old gap. Now let's zoom in and look at this on a 5-minute time frame, and let's see what it looks like. Is it holding? Miraculously stops right at the bottom of the gap. Okay, and that's how you do technical analysis. So other than that, I don't have anything else. Just again, markets trading at all-time highs. Position appropriately, right? Don't get greedy. Be super patient. Even I have to learn that, right? Of my Apple trade, it was a great example where $1,000 investment would have turned into 12 grand by the end of the day. But this is why we journal in TradeZilla. This is why we learn how to read the market and then to maintain really good risk management. I took the trade off because I was managing risk. I was willing to manage risk versus gamble for profits. So therefore, I have another day to trade. With that, everybody, if you're interested, the enrollment is open for the September masterclass. It is the last one that I am teaching of the year. So if you really want to learn all of this from a technical level perspective, you want to take this seriously and run it as a business, and you have not taken the class, jump into it. And then for those of you that have taken the class, if you have any referrals, hit me up, let me know, and I want to make sure that you get the referral paid to you because you are due those monies. And more importantly, I do this to educate, to give people an opportunity to really see that when something is done correctly, that the earning potential is endless. So with that, everybody, have a phenomenal Sunday, and I will see you all at the market open Monday morning. With that, take care. I appreciate you. Thanks for watching. If you haven't already done so, make sure you sign up for the free weekly watchlist emails to get early access before the video drops here on YouTube. See you next time.